Hi, so we're going to be comparing today what does it look like if you're storing your money, your liquid cash inside of a savings account and then executing investment strategies or tax strategies or just opportunities that come up versus if you do the same thing inside of a whole life policy, what is the end result and difference between the two for your money and overall production? We're going to be using, again, Truth Concepts calculators, so you can go get those at truthconcepts.com if you want to run the numbers yourself. And let's just dive in. So in this example here, we have 34 years to illustrate. This person is 36 years old again. They're contributing $27,184 into the account on an annual basis. They're getting a 4% return. The reason I chose 4% return is because I wanted to choose a number that is probably unlikely for a savings account, but it shows that like even with this higher rate of return, it's going to perform not as well as a whole life policy. And then we're in the 35% tax bracket, so we have to pay taxes on the growth. And so now we're having to see the growth be diminished because we're paying taxes versus whole life doesn't have that effect. And we're going to get into it here. So you'll notice here, everything is going in, 27,184 in, 27,184 out. It grows a little bit and it just is accumulating over time. Here's the tax column right here. When we reach the end of the time frame, we have 1.4 million inside of the account. Now it's okay. Well, I have opportunities. I don't want my money just sitting in a savings account. Like that's not advantageous for me. I'm going to use it. So let's start adding use of it. We're not going to start off too progressive, but we're going to start adding use to it. So with this example, we're going to have $100,000 pulled out four times, and it's going to take us 8 years to put the money back in. So I used the 100,000. Let's just say I used that 100,000 to go buy a multifamily property, put a down payment on the multifamily, and then it's producing cash flow, and I slowly pay the money back into the account. And then I get to do it again in year 10. I put down another 100,000, and that multifamily is going to produce cash flow for me. And then I pay the money back in, and then again, starting in year 20, and then again, starting in year 28. When I reach the end of the time frame, I still have $1.4 million in the account, even though I did this because I was paying myself back. I wasn't just taking the money out and never putting the money back in, but I was constantly putting the money back in. If we compare this to whole life, which is going to be represented here, so with whole life policy, because I don't have to pay taxes, it's going to grow to just over 2 million. If I say everything else is exactly the same minus the taxes, and inside this is the growth of the policy. If I do the exact same thing, we're starting in year 4, I pull 100,000 out, same exact deal. It produced cash flow, and even though I'm leveraging my whole life policy, so the life insurance company gives me a loan for 5%, which is represented right here, I still end up with $2 million inside my policy. So I'm still ahead of the bank account. And everything else is exactly the same. Even though I'm paying more to put the money back into the policy than I would have had I done it from the bank account, I still end up with more money. So let's see how much more money we end up with. So we're just going to use an interest rate calculator. It's going to go right here. So we're going to just do a difference between the two. So we'll grab this amount, and then we'll grab another amount, and I lost my calculator. And then we'll grab the 1.4 million. And what is the difference between the two? After 1 year, because we're at the same time frame, I have 42% more money inside of my whole life policy than I did the savings account. All I did differently, everything was exactly the same. The same amount of dollars went in, the time frame was the same, I spent the same money on the exact same transactions, and just because I ran it through my whole life policy, I have 42% more money, and that includes the cost. Like I still had to pay back the loan, so I had to pay more to get the money back in the policy because my account was leveraged. But even with that, I still have 42% more money inside of my whole life policy than I do inside of my savings account. Now let's look at it as if, let's add more to this. So we're going to get every year, we're going to do every other year. Sorry, we're going to do $50,000 out of the account. Maybe it's a tax play, maybe it's an investment. Every other year, I'm pulling out $50,000 and I'm paying it back as the cash flow produces, so that when I reach the end of the time frame, I have 1.3 million inside of my bank account. And let's put that number here so we can see the difference. Versus when I get to the whole life policy and I do the exact same thing, even with the cost, the whole life policy stays exactly the same because I haven't missed out on any growth. The reason there's a difference here, if we bring this back over, the reason this one dropped to 1.3 million and didn't stay at 1.4 is because when you pull the 50,000 out and it goes and executes the investment strategy, it's outside the bank account. So it loses the chance to keep growing at 4%. And now it's either doing the job in the bank account or it's out doing the investment. It's an or asset. Savings accounts, money markets, CDs, they're or assets. Inside the whole life policy, because I have consistent growth, even when the money's out, it just keeps chugging along. So it stays exactly the same because I'm always paying the money back, even with the cost. And so in this case, now I have 51% more money inside my whole life policy than I do inside of my bank account. And I still have the exact same amount of investments. I still have the exact same amount of tax plays. I still have the exact same amount of opportunities. I didn't miss out on anything because I ran my money through whole life. And I have 51% more. That's why we love to call life insurance the and asset, because I can do two things at once. I can get better growth inside the policy, and I can still execute on exactly the same stuff that I get inside of a savings account. I hope this video was valuable to you. I hope that it cleared up some things if there's confusions, but I hope it reinforced the principles that we're trying to teach.